Hello and welcome to the latest midweek edition of the Sharesify podcast. I'm joined, as always, by James and Steve. How are we, gents?
All
All good,
dandy.
Ian.
It's another scorcher, and it's another scorcher for the US market with S&P and Nasdaq almost back to their highs. That capex AI capex trade is well and truly on again, isn't it, Steve?
Yeah, I mean it's been so jumpy. I mean the last few weeks we've seen so much volatility, and it's great. You talk about global markets, but look at the cost split. So the South Korean market, so dominated by Samsung and SK Hynix, it lost nearly 10%, and it had to be trading had to be halted because of they're worried about panic selling and so on. And yet, a day goes by and suddenly there's a big recovery again. So it really is
Yeah.
up one day, down the next. It's so difficult to assess where investors' sort of sentiment is going to land. So interesting stuff going on. We had IBM announce some interesting, very disappointing figures. But interestingly, I thought the CEO was quite honest. He suggested that he thinks their team have been particularly slow at adapting their business models in this new age of AI, and so they've seen some of their customers kind of redeploy capex in the short term and away from the kind of stuff that IBM are trying to do. So that's the reasoning why the results and the guidance was rather weak. Whether that's long term or not, we shall wait and see. We had an opportunistic bid from of PayPal. It's kind of speculation at the moment, but allegedly Stripe, big Irish-based payments company owned by Scottish Mortgage, and Advent International PE company looking to maybe take PayPal over. So interesting dynamics, but it looks like a really bargain basement opportunistic bid. So whether anything comes of that, we'll again wait and see. And the other really big news, of course, is ASML knockout results again. Shares responded pretty positively, up about 5%. And that's a real clear indicator that the AI trade capex is going very, very well, and looks to be very strong for the next couple of years, realistically, not just the next couple of quarters. But it's just about our valuations already reflecting that, and that's the big debate.
Yeah, I mean, customers clearly can't get enough of their stuff at the moment. And James, consumer stocks in the UK also going well still.
Yeah, surprisingly resilient still, Ian. So we've had Dr. Martens out
Oh,
this morning. The key comment there, I think, was on US wholesale, which they said was encouraging. So that turnaround seems to be on track. Some very curious companies have reported as well. So ME Group, this is photo booths and laundry machines. And it's also trialing dog washing machines. So it's quite an interesting business.
Oh,
Um,
really?
yeah, it coughed up a profit warning. I think it was April time, where it blamed kind of the Middle East conflict for a slowdown in passport applications. But they flagged a return to more normal trading, and they were sort of doing a lot of deals with Asda, Morrison's, Audi, and Lidl in terms of putting those laundry machines at the front of stores, which seems to be going quite well. And just one other one that caught my eye was Sosandar, which is it's a micro cap. It's an online clothing retailer, but that's returned to pretty strong revenue growth after taking a hit from the M&S cyber strike last year, which M&S is a third party partner for the business. Unusual in that
yeah.
Sosandar it was opened brick and mortar retail stores, which is online only, but it's gone in that direction. Still a bit of a drag on profitability, but they're seeing some signs of an uptick with their physical stores. So very interesting indeed.
So,
Yeah,
I just
I
want to
guess.
ask you a bit more about dog washing. So this is
Yeah,
what you put a dog into like a big washing machine.
yeah, and you get your pooch clean, you spray it, and it's at the trial stage. So yeah, a
That's
very curious business.
that's a brilliant addendum to their core operations.
It couldn't get more random, could it? Um,
No,
the
it's a
the one
unique
thing that's
asset.
the one thing that's obviously caught my eye this week is how the oil prices rebounded when everybody thought the Strait of Hormuz was
Yeah.
back open and shipments were going to reach normal levels. I don't think there was really realistically any chance that would happen. So it shut again. Brent crude's over $85. BP's come out with a Q2 guidance, which is obviously a lot higher than it was because the average crude price for them was over $100 in Q2. And I know that most analysts, when they forecast earnings for BP and Shell, have been using $75 for Brent crude this year.
Yeah.
So that's pretty standout.
I
And
mean,
also,
I think the interesting thing. I mean, we saw US CPI was pretty pretty calm, really. But oil prices, CPI is a trailing index, obviously, and so oil prices could start creeping up again with more conflict going on, acceleration of conflicts. So I mean, it's the inflation monster. That's the big issue, isn't it? Because that's really going to dictate the direction of interest rates. And if we start seeing interest rates rise again, that will really put a damper on stock markets.
Well, it's interesting because, despite all this sort of all this and geopolitics and so on, you look at the US bank results and they are absolutely blowout. And Jamie Dimon saying, well, consumers still spending, businesses are still investing and hiring, and obviously they've all made loads and loads of money out of things like the SpaceX IPO, companies raising money left, right, and centre. I think they had record trading in equities, and I think actually Goldman Sachs now holds the record for quarterly revenue from trading equities on Wall Street, the whole of Wall Street. They've posted the biggest ever results. But we think about, as I say, markets approaching highs. Even Jamie Dimon did say that he wondered whether it's as good as it gets. And I think investors may be feeling that too. So you guys have done slightly more defensive pieces on investment trusts.
James, go ahead.
Yeah, that's right, Ian. So if people are a bit nervous about perhaps an AI bubble or those sort of things, we've just flagged 5 ideas. 3 are the sort of capital preservation funds, and then another one is a global macro, and also a UK equity income fund that buys stocks on low starting valuation, so it might have a bit more downside protection to it. So do take a look at that on the website.
Yeah, I wasn't looking at the investment trust space, but I looked at open-ended investment companies, so normal sort of funds, and really the aim was how to build a portfolio that could give you something in the region of a 5% annual return, and nicely diversified. So I'm not going to mention any of the names that I've featured there. You listeners, come to the website, go and have a look at that. We do these kind of features quite regularly, looking at different ways to try and earn regular income. Because it's quite an interesting debate. A lot of investors only want natural income. Other investors want total return. We've written about that as well over the last couple of weeks. So come to the website, have a look around. There's loads of good content there.
Yeah, and doing it through funds and trusts is a really good way to hedge your bets as well. Because if you are an income investor, if you look at what Barratt Developments has come up with today, they're replacing dividends with share buybacks. They're going to pay a notional 1p per share dividend, and all the rest of the full year 26 final dividend and the interim FY27 dividend are going to be in buyback. So you're not going to get the income, and it's really important. Diversify your approach. Try use funds and trusts to do that. What else have we got to come then, fellas?
Well, I mean, really interesting results coming up tomorrow night. It will be Netflix, and Netflix, I suppose, is traditionally the kind of kickstarter of the tech side of earnings. So the banks always start these things off, and you talked about the banks earlier. The US tech cycle really gets going with Netflix, and their results after the market closes Thursday tomorrow, after the bell. And I've written a piece, put it on the website. I mean, the shares are down nearly 20% year to date. And I think it's really worth having a look at why that is the case and what the company needs to do to address that. What's going to make the market sit up and go, suddenly, we like Netflix again. So have a read of that. It's on the website. It's not quite live yet. It'll be live in the next half hour or so.
Yeah, that's interesting, isn't it, Steve? How I say we've got markets at highs and this AI capex trade is on. Yet some stuff just gets left behind. People just aren't paying attention to it. And James, what have we got in the UK coming up?
Yeah, so we've got Dunelm and Frasers tomorrow, so that'll be a busy one for retail. Good read on the homewares market from Dunelm. Frasers, you've got a read into sportswear and that kind of affordable luxury segment, and quite timely with Mike Ashley reportedly trying to gate crash the Harvey Nichols deal from Next. So it'll be interesting to watch.
Absolutely. I mean, the other thing is next week we should point out. I think you and I are chatting with Mercantile Investment Trust, aren't we? UK small and mid cap specialist invests in what they call tomorrow's market leaders, and that is next Thursday, folks. So that's the 23rd of July. Make sure you stay tuned for that. Yeah, we'll keep our fingers crossed for a good result for England tonight. Take care.
Yeah, see you guys.
Brilliant.